Well, welcome back. Let's take a look at futures this morning. We are looking at a sell-off once again this morning. The Dow Industrial's down 132 right now. The Nasdaq down 90 points. The S&P 500 lower by 20. All of this in reaction to Treasury yields spiking once again at new highs. The 10-year yield surging to a 16-year high this morning. Take a look. It's sitting at 4.728%. It's up almost 5 basis points right now. The 2-year is nearing a 17-year high, sitting at a level of 5.121%. Federal Reserve Chairman Jay Powell spoke to small business owners yesterday who were fed up about higher interest rates and the impact on their businesses and obviously their debt. They're also upset about higher prices overall. Inflation is still a factor. The chairman reiterated that the Fed will take inflation down. Joining me right now is Crossmark Chief Investment Officer Bob Doll. Bob, great to see you. Thanks very much. When you see yields the way they're moving today, does that give you some pause about putting new money to work in stocks? Do you want to shift the portfolio over to fixed income to take advantage of those higher yields?
I think it's too soon in the bond market, Maria. We needed to settle out first. There's still too much thinking that the economy's okay, the Fed's done or almost done. In a few months, they'll be lowering rates. Inflation goes back to 2%. You know, living back a decade ago, the world has changed. And I think the valuation adjustment is in the process of recognizing that.
So how do you want to invest in an environment where rates are going up, Bob, and oil prices are still elevated? I mean, look, oil is tumbling this morning. We're at a 3-week low right now, but it has been a wild couple of months for oil, as you know, right ahead of this OPEC meeting happening tomorrow. Do you want to buy energy-related assets? Do you believe oil stays elevated? And what's your take here?
Yeah, so on the portfolio overall, I think you want to have some defense in the portfolio. By that, I mean high earnings predictability, high earnings persistence, good cash flow, reasonable valuations. Don't live out on a limb too far. When it comes to energy in particular, I don't think we've seen the high in oil yet. Yeah, this is a pullback from what's been almost straight up for the last few months. I think the supply problem continues to exist, and that will keep prices on the high side and firm. So on any dips, buy some energy stocks.
Well, you got to believe that higher interest rates are cutting into growth, right, Bob? I mean, look, we're waiting on the August JOLTS report out this morning at 10 a.m. Economists are expecting 8.8 million job openings available at the end of August. The chairman of the Fed says that the Fed is focused on achieving a good labor market for a sustained period. And we've seen a very good labor market. But little by little, we're seeing cracks in this growth story. What are you expecting in terms of the macro story year end and into 2024?
More cracks, Maria. I think the adjustment from, call it 4,600 to approaching 4,200 on the S&P has been all about valuation. This interest rate thing that we've talked about a few minutes ago. Yet to hit us is, will earnings weaken because the economy weakens? Dare I say the word, it's left most people's vocabulary. Will we have a recession? And my guess is we probably still have that in front of us. All those lead indicators are still pointing in the wrong direction. So we probably have an earnings adjustment in front of us as well.
Yeah, that's what I want to ask you about earnings, because we're just about a week away from this third quarter earnings reports beginning to flow. That's going to obviously set the tone for markets. What are you expecting in the way of the third quarter earnings, Bob? And do you think we're going to hear some negative assessments of what 2024 looks like?
You know, I think like the first and second quarters, Maria, that came in better than expected, but still down. I think it'll be similar for the third quarter. Results will be okay relative to expectations, but we're not growing in terms of earnings. And I think you're absolutely right. What do they say about how business is now looking into 2024? And I think we'll see some weakness, some margin pressure will creep in. Therefore, some pricing power questionable. We still have cost pressures, and maybe there'll be some demand reduction, and that will cause some nicks, if not further cuts to earnings.
Yeah, I mean, the guidance is always critical during these earnings periods and the releases there, Bob. How are you allocating capital today?
Yeah, so for a broad-based, a balanced portfolio, we say nibble on bonds as yields go up. Don't neglect the front end where you can get 5%, but don't put all your money there because that 5% won't last forever. In terms of equities, be really careful. You got to have some, but don't own a lot of things that require lots of external things to go well. Make sure you understand the earnings pattern, have high predictability. To repeat myself, good free cash flow.
Great point, Bob. Good to see you. Thanks so much.